Hi folks, how you doing? Going to do a trade review here for today. I did a few trades, Roku, Tesla, Apple. Let's take a look at what happened here. So Tesla was the first trade of the day, and as you can see yesterday, we got a huge sell in the end of the day here, kind of looking like it could be a blow off top. And if you want to know what that is, just look at Bitcoin when it topped out. Look at any of these big markets when they topped out. You get a huge move like that. That's called a blow off top. Anyways, so today we were gapped down, and I was watching the level of the high of the previous trading session, which was 786. So we're watching that and to see if there was any possible plays on that level. So we initially sold off right to that level and then bounced. And the bounce was pretty fast. It was extremely fast momentum. So I bought in on the break above this high at 825. Small size on this trade because Tesla is extremely volatile and it's not my number one in terms of comfortability in trading. I do honestly believe that every trader should get comfortable trading a basket of names instead of trying to move between too many markets at once. So Tesla is on the lower end of my comfortability range right now, but I'm trying to move it up as it gets there, okay? So I got in Tesla right on that break with a small size, and then I was taking off a 2/10 of the position every time. So you can see there, buy 50, and then I was selling 10, 10, 10, 10 for profit. And then by the time it got back, I sold the last one for break even, and that was it. It was a quick scalp, and it was great. Can't argue with that. It was basically a simple momentum trade. Now, the next trade on Tesla was the opposite direction. When we broke, I saw this candle form on the 3-minute. This was bearish, and now any kind of break lower will probably signal a reversal or basically just a failure, because as you can see, we tried to move higher, failed, and now the market's going to try to move lower. So it's essential. And Tesla is a whipsaw in both directions. The longs get trapped, shorts get trapped, and they have to cover fast, or else it's game over for them, you know. So that's the thing. So I took another small short right there, right on that break, and then I was covering before we hit the low of the day because I was expecting it to again hold initially and potentially stay in a tightening range. I was not expecting it to break on its first attempt, and as you can see, it broke and then got rejected right away. So yeah, so I covered all of it there, and then I covered the rest there. So that was it. And as you can see later, now this kind of price action favors the bears. As you can see, we're just kind of chopping around sideways and then kind of roll over. And when it rolled over, it really rolled over, you can see. So another great short trade there. I didn't take that one. Let's move on here. So Roku and Apple. Okay, so start with Roku. I like Roku. I like to trade this one. It's very fun to trade in both directions. So we had an initial sell in the morning, first thing, right from our resistance we were watching yesterday, remember? And we gapped up above the resistance and then sold off right into it. And if you look at SPY also sold off first thing this morning. Apple also moved higher and then sold off first thing. So there was a correlation there in the entire market. And basically, when you see huge panic sell moves like this, generally dip buy works quite well. You just have to time it right, and you have to make sure there's adequate momentum. Now, as you can see, I bought in right here. Now, the reason I don't like this entry now, looking at it in hindsight, I find I jumped the gun a little bit, is because I bought in while it was still an inside bar. And that's something you have to be aware of when you're trying to buy the dip. You need to, there needs to be a bit of a greater confirmation that there's momentum in that direction. If you're still an inside bar, it means you're still in the same price range that of the previous few bars, which is decreasing the odds essentially, or the odds are not there yet to show you that there's momentum in that direction, is what I'm trying to say. So I got in here, and basically, judging from the 3-minute and 5-minute time frame, the entry had to be over 129, I believe. Had to be over 129 because that was the inside bar. Let's take a look. 3-minute time frame. I'm always constantly switching between the 3-minute, 5-minute, and 2-minute to see which one has the most clarity. Depends on the stock too. Sometimes 1 minute can work too. It depends on your style and it depends on the stock. So yeah, judging on this bar, it was above 129. It had to be. No, it was actually above 130. It should have been above 130, that buy. Anyhow, in hindsight, it doesn't look great, so I exited right there on the bear break. And because I don't play around, by the way, with stocks like Roku, when you're seeing a big sell like this and then a sideways for 4 bars and then it breaks the low, I'm out. You do not play around with stuff like that on stocks like Roku. Roku's a momentum stock. It goes whichever direction it wants. It can whipsaw around sometimes, and often when it gets momentum in one direction, it tends to keep going that direction for a while until either side of the trade is wiped out almost. So there you go. Alrighty. So basically, as it broke this, I reversed the position and went short because I said, okay, this was the low of yesterday, essentially. And at that point, we're breaking below the low of yesterday. And I think that this trade in general was crowded. Now, looking in hindsight, this long trade was crowded in the fact that longs here, longs here, longs here, longs from yesterday all got stopped out, and now second wave. So it makes sense to see that. It makes sense to build a thesis of a trade off of something like that. So that was before that bear break occurred. Just the probability still in favor of the bears at this point right here. Now, again, let's look at the SPY correlation because it's so important to watch this and look at what SPY did. So the bottom here was hit at 939. No, sorry, it was hit at 951, the bottom. And look at what SPY did at 951, 949. Yeah, SPY had already started bouncing at 942. So while SPY was doing this, while SPY was bouncing up for a lower high, Roku was going sideways. So again, it's the same bearish signal that we saw yesterday, 2 days in a row now, where SPY is getting the bounce, Apple's getting the bounce, and here, Apple, I took that trade also on Apple. You can see right here, right on the bottom. As soon as we held the 12 exponential on the 2-minute time frame, I was watching the SPY, I was watching the momentum there, and I decided to take a trade based on the 12 exponential moving average on Apple. And my stop would have been at least a point below or below the 26 at that point. Okay, so you got it. So that was the trade. Roku didn't work. Apple worked. I reversed the position short on Roku, and it got follow through, and I was covering as it went down. So this successful short trade on Roku, and I covered at the gap fill, or just before the gap fill actually. Okay, because I'm safe. I don't play around. We don't go into greed. I don't say, okay, another dollar, another dollar. If you trade like that, you're gonna blow up your account. Okay, you have to be safe in terms of when you're covering your trades because you don't know if it's gonna fill the gap. You don't know how far it's gonna go. I think it was likely to fill the gap, and that's why I said I'm going to cover. My target is the gap fill or just before the gap fill. And as you can see, I was covering again. I always cover the position in multiple orders because I take off little bits at a time. But here, I mean, as you can see, I might as well just taking it all off. So yeah, Roku got a lot of downside after that. And that's pretty much it. Phone's ringing on the couch there, yeah. Okay, so let's go over, now, here we go. This is no, let's go over Apple first, then I'll get back to Roku. So with Apple, there was a number of mistakes in that I made. And let's go over them real quick. Apple, dip buy worked better than Roku with some more SPY correlation. Okay, I exited for half profit and then held the rest with a small drawdown after we broke here. Okay, so I was here, I exited half for profits there, and then I saw this lower high, and then I was holding through this, expecting the 26 EMA to hold. Now, I want to present to you the dangers in this. Here we go. So my mistake with Apple was I decided to add to the trade in an area where the risk to reward was not beneficial, okay? And this sparked me to hold longer and endure a drawdown, resulting in me averaging down and expecting the gap to fill in the market right here, this gap, and hold and then go my direction. So I am now playing in dangerous territory here because I am now going into hope land and expecting the market to do something to get you out of a hole. So what I was doing was potentially digging myself a deeper hole by adding to this position here. So this was the great trade. Boom, in and out, done. And then I held half here. I was barely down, just like barely. And then after that, I decided to buy the dip here. And then we got a bear break. So at that point, it was clear I was wrong on the trade. But for some reason, I decided to hold. And it's a mystery to me at this point as to why I decided to hold, because that's it. So looking at 2 minute, we chopped around went lower, chopped around, went lower. And I was watching the QQQ and SPY at the same time as this because it's so essential that you watch them to see what they're doing to gauge market direction as to what's most likely, okay? So I'm always on my main screen here. I usually trade with Trader Workstation, to be honest, but now I'm using just TradingView. On this screen, I have my main charts that I'm looking at, and on up there, I have a whole bunch of charts I'm watching, like daily tickers. And then over here on the left side, I have the SPY, the financial sector, and the tech sector, all looking at what they're doing individually in relationship to each other, okay? I'm going off topic in this video a lot. So yeah, Apple filled the gap. I scaled in. I mean, I averaged in. I averaged in again, and then it went my way, and I got out for a small profit. Okay, so I positioned the trade in a way that I was averaging in and expecting this gap fill to hold. But again, that's a negative way to trade because, like I said, I was a subject to wishful thinking and hoping that the gap fill was going to hold, because it may as well have filled the gap, made a lower high, and then boom, and swept me out right there, and for 3 times what my initial loss was going to be because I was averaging down the trade. Makes sense? So I got lucky, say it that way. Trying to eliminate this bad behavior from my trading. Now, let's look at another example to finish off this video. Let's look at one more example on Roku that it was a great dip buy trade. So now this is, look at Roku look at Roku on this sell move. So it was just an absolute bloodbath after we went below this gap fill. Absolute bloodbath. Look at that, and then look at how it's respecting the 4 EMA on the 2-minute and on the 3-minute time frame. So I was looking at Roku and I was saying, okay, this is just an absolute bloodbath, and eventually there's going to be nobody left to go short or nobody left to sell. And when that occurs, the price is most likely going to break above the 4 EMA and potentially find momentum in the other direction. So that was my thesis for this trade, and I entered, let's take a look, right there. Right as soon as we got a close above the 4 EMA, I was in. See that? Look what happened after. Momentum shift in the other direction. It was heavily oversold after that. So that's called an oversold bounce generally. And that was it. And I was out of the trade by there. By the time it touched the 26 EMA, I was out. I wasn't looking for much on this trade, but it was a great trade in that regard. So I'm up for the day in this paper trading account, but it doesn't mean I had a perfect day because I'm not making this video for no reason, guys. So I wish you all a great day, and I encourage you to review every single one of your trades to ensure that you are doing the right thing and not being a subject to wishful thinking, hoping, just trying to justify averaging losers, blah, 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 okay? Stay in focus of yourself when you're staying in trades, all right? Have a good one.